Hi, everyone. Good evening. I'm Rodney Glotfeld. I'm the Vice President of the Board. And in Tom's absence, I'll call the meeting to order. It looks like we have Monica here and Jason Matthews on his way. And I'm here. Tom couldn't be here. Mr. Woods couldn't be here. He was down in Myrtle Beach and, vacationing. And, of course, the hurricane made a move towards Myrtle Beach, and he got word this morning that they're expecting 80 or 90-mile-an-hour winds, and so he had to do a little preparation for that. So he was going to join us virtually, but I don't think he can do that now. So that's what Mr. Woods' story is. Let's stand for a brief moment of silence and then do the pledge to the flag. Pledge allegiance
to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Okay, this is a special meeting of the board. The purpose of it is to review the audit findings. Our auditors have been hard at work with Allison and
Yes.
Superintendent Baker. Do you want to introduce?
Absolutely, thank you. I would like to introduce our Director of Finance, Ms. Allison Schweitzer, and welcome the Rodeheaver Group this evening, and she's going to introduce her two counterparts from Rodeheaver, and then I believe we can get started with the review. Thank you. Oh, you have to call for a motion to approve the agenda? That's okay.
Has everybody had a chance to view the agenda for the night? Can I have a motion to approve the agenda?
Second.
Okay. And we don't have minutes to review yet, do we?
We do not.
Okay, so the agenda is approved because I'll vote in favor.
Okay.
So we'll turn the meeting over to you, Alice.
Good evening. It is my pleasure to present the fiscal year 2022 audited financial reports to the board, as well as welcome the Rodeheaver Group tonight to present the results of the fiscal 2022 audit engagement. So this evening with us from the Rodeheaver Group's governmental audit team is Brant Moorhead, principal, and then we have Brianna Callis, supervisor. There are a couple other valuable members to their team that aren't able to be here this evening. Stuart Stickle, he's the director, and then we have Nathan Schaefer and Dylan Lucas. So we had quite a team this year. All of these extra federal awards have really ramped up a lot of extra work and a lot of extra accounting and checking and compliance. So we are happy to be here this evening and have this task complete. So Mr. Moorhead will present the audit opinion, the auditor's report on internal control, and review the required communications with those charged with governance, which is you, the elected board. I will present the financial report as of June 30th, 2022, and then Ms. Callis will review the Federal Awards Program single audit. So, Mr. Moorhead, if you want to.
Appreciate that. As Allison said, I'm going to go over three different reports, just in order of how I pass them out. You'll see the first one, it's titled Independent Auditor's Report on Internal Controls over Financial Reporting. I know this was passed out to you guys ahead of time, so I'm going to kind of hit the highlights of these things and let us know if you have any questions. The internal control over financial reporting point is related to our planning, performing of your audit. We consider the internal controls over financial reporting and your compliance to determine what our audit procedures are going to be for this coming year. And it helps us to express our opinions on your financial statements. I'm happy to report that we found no material weaknesses in your internal control over financial reporting and compliance during our audit. So that's really a summary of our first page there. Our second attachment that you have, loose leaf paper there that's just headed with September 20, today's date on the top. This is kind of a communication to governance, as Allison pointed out, and it really points out three different things. If there's any significant standard changes to the current year's audit, any significant estimates that we want to draw the board's attention to, and then our communications with management. So I'm going to highlight those three items right now. So we did have a new GASB standard this year. It was GASB 87, which is a new standard for leases. Allison, myself, and Stuart and Brianna really worked hard on implementing that for this year. So there is a new standard. You'll see that in the audit report. So there were some changes to this year's financial statements as it relates to leases than there have been in years past. I'm going to direct the board's attention to note 9 in the financial statements that describes that in more detail. Secondly, the significant estimates that impact the Board of Education. As an auditor, we deal in factual information. It's always good to point out the things that are always going to be estimates on your financial statements because those are subject to change. So you'll see in note 10 and 11 in the financial statements as you go through those will be your OPEB liabilities and your net pension liabilities. Those are the big estimates on the financial statements that I want to draw your attention to. And then lastly, in our dealings, I'm happy to report that Allison has made agreed to all of our proposed adjustments. We have no uncorrected misstatements of the reports, and we had no disagreements with management during our time as your auditor this year. Lastly, now getting into kind of the financial report, if you turn to, really it's a page after the index there, it's the independent auditor's report. Going over that, I think our responsibility as your auditor is to provide reasonable assurance that the financial statements are free from material misstatements. To that effect, I'm happy to say that our audit was a clean, unmodified opinion on the financial statements presented. And I'll turn it back over to Allison for the actual detail of the statements themselves.
Okay, so if you go in the That's good? Everyone can hear? Okay, so if you just go to the next page beyond the auditor's opinion, you come to the management's discussion and analysis. This is the portion of the financial report that is a narrative overview of the tables and schedules you'll see in further back. It's also the portion that your finance department prepares. So this is kind of like the overall report in language to talk about what all of these numbers mean in the back. So the first statement I'd like to discuss is on page 15, the statement of net position. So the statement of net position is a district-wide financial statement. It's reporting on the system as a whole. So this includes everything that the Board of Education is overseeing. All of the estimates, as Brant had indicated, are all here, and it's on a full accrual basis. So this is not typical reports that the board sees. Normally, we're presenting on a budgetary basis. So as we go through the statement of net position, one item of note that's different from last year, this year, is under the asset category, the leased assets net of accumulated amortization. That is as a result of the board adopting the new accounting standard that Brant discussed, GASB 87 leases, and then the full account of that impact is in note 9. So the year over year, the net position for the Board of Education did increase by 22.91%, a little over $2 million. And the increase is due to the capital assets increasing primarily the construction in progress of the Grantsville open space conversion, and while the liabilities remain the same, remain consistent year over year. On the next page, 16, you'll see the statement of activities. This is also a district-wide review of the board's financials. There's an emphasis here on the determination of net cost to provide educational services. So the way to read this this table is really to look at the expenses by the categories that you're familiar with, and then across as you move to the right, you'll see the program revenues. So we kind of back those out so that you get to that net expense, and then you go down at that point and back out even and look at the general revenues. So when we look at the expenses on that first column, transportation year over year was a pretty significant increase. It was about almost 19%. And that shouldn't come as a surprise to the board. We did have a budget amendment during the school year, or during the fiscal year, and you were aware that fuel rates had increased pretty substantially. The other factor to that increase year over year was that buses didn't run as much in 21 as they did in 22. So it was kind of a double factor there. And then if you were to look at the other expenses, one thing that increased, instructional other, that increased year over year, and that was driven by the student activity accounts, the school activity accounts, which is a good thing because that means they're getting back to a much more normal operation. So you'll see as we get through some more of the statements that their balances are at a much more healthy level, and so we're happy to report that. Then when we go across to the revenues, when you look at the charges for services, that's the first one, that other portion again is increased, and that's the school activity accounts. You're seeing that flow through. Food service, if you were to compare that year over year, well, last year was also an odd year because of all the federal waivers. But if you would look at 2020, June 30th of 2020, that's a pretty significant drop. We did run the federal seamless summer program all year long, and so all students were free. If you skip over to the grants, capital grants and contributions, that $4.5 million amount is really because of all of those capital projects that we did. And we'll talk about those when we get to the capital assets, note 4. Okay. So the next page on 17 is the balance sheet, and now we're into governmental funds. So this provides a detailed schedule by the fund. And the governmental funds generally this balance sheet generally focuses on the current financial resources that can be readily converted to cash, the balances that are left at the end of the year and available for spending. Now note, they're not available for all spending. You know, some are restricted, some of the balances are inventory, so they're non-spendable. So when we look at our total governmental funds, which is the far right column, the increase year over year is due to a combination of an increase in our food service fund balance, which is driven by both inventory and restricted for food service, as well as the current expense fund received a little boost from that capital grant amount that last year we booked as a deferred inflow. And so it was can't say it was artificially deflating the fund balance, but we knew it was coming. It was really a timing issue. So the fund balance was low last year with the anticipation of receiving that reimbursement, which we did throughout that school year. So with the fund balance, the total governmental fund balance that you see here, the Board of Ed is ending the year in compliance with its fund balance policy, DFAB. So the assigned for subsequent years should be, subsequent year budget should be between 4.2 million and 5.6 million. And if you recall, this policy is in place to provide enough resources should the government shut down or should there be some other catastrophic event that Garrett County Public Schools could operate for anywhere between 45 and 60 days. So that is one other test that I do after we've looked at the whole fund balance. Okay, if you want to skip to the next page, page 19. This is the statement of revenues, expenditures, and changes in fund balances. This is similar to the presentation that the board normally sees. And it's important to note that the current expense fund includes unrestricted, the restricted, and also school activity accounts. So you're not going to be able to tie any of these numbers to the budget book that you all have. When you go into when you look at the school construction fund and drop down to the row that says excess deficiencies of revenues over expenditures, that's where you're going to see that $1.7 million of revenue that we received that we weren't able to book in FY21. So you'll see that flow through. Okay, if you skip over a page and get to 21, now the next couple pages, these schedules are the current expense fund split out by the different functions. The first one is the unrestricted, and this is what you see with your unrestricted budget that the superintendent prepares for you. The revenues were 0.2% of final budget, whereas the total expenditures were 2.17% of the final budget. We did go over in operation of plant. We had discussed several times the high cost of operating in-person learning all year long, and that was a result. That was one of the results. Another item of note: instructional salaries. We did have $262,000 on a positive budget variance there, and that was as a result of the school system utilizing restricted funds ahead of unrestricted funds. I know that we've shared with the board several times that we've had unfilled vacancies, unsuccessful searches for certain positions, and there were some salary funds that we were unable to spend as a result of that. The special education budget to actual variance of $245,568 was as a result of a position that was unfilled in special education for the entire year, as well as a conscious decision to spend down a portion of our MA funds. We were directed to do so from the state. We needed to get that fund balance within a certain area as well, certain threshold. Then when you drop down to maintenance of plant and capital outlay, you need to look at those two lines in tandem, because capital outlay, the actual $411,233, some of those dollars were in maintenance of plant and reclassed because of the cost threshold. So overall, the actual revenues were over the actual expenditures by that $315,224. So that's the amount that would be added to the fund balance from the unrestricted fund. Then you see that $1.7 million, again, that's that capital grant revenue that we received in this fiscal year to get to the fund balance for the current expense unrestricted at the end of the year. Okay, on the next page, you'll see the restricted budget to actual table. Here, the large variances between the final budget and the actual represent timing differences. So as you're aware, the federal COVID relief funds that we're receiving are available to us, most of them, until September of 2024. Therefore, because this is a multi-year fund, we book the whole budget at the very beginning, even though we have planned internally to only spend certain amounts each year. The excess and deficiencies of revenues over expenditure, that negative $66,142, that's the spend down of MA. So the fund balance attributed from restricted is all of our MA funds. And by performing that spend down, we are in compliance with what the state asked us to do. Okay. The next budgetary basis schedule is school activity accounts. And here you'll see that the excess was $184,212. And again, we are pleased to see that the revenues as well as the expenditures are getting closer to their normal levels from the 2019 levels that we had seen. The last of the budgetary basis schedules is the food service fund. So again, the revenue was a little bit strange, not year over year strange, but if you look back on to 2020, because the vast majority of the revenue came from federal funds, and that was through that summer feeding program. The waiver did expire, but so at this point, our revenue is going to look different in 2023 for the food service fund. The net change in fund balance was $233,401 on the positive side, which was a combination of both an increase in inventory as well as the restricted portion. Okay, so if you skip another page to page 26, you'll see the only remaining fiduciary account that the Board of Education has, and that's the OPEB trust account. The net position here did decrease, probably like everybody's 401k. That was the reality at that time. There were no contributions to this fund during the fiscal year, so the large net increase or decrease is the fair value of the investments. So the next section of the financials is the note disclosures. So they represent a fundamental component of the information that financial statement users should rely on to understand what all the tables are that we just went through. So I'm going to skip around a little bit here. I'm going to go to note 4, which is capital assets on page 40. So on note 4, this schedule was restated as a result of adopting GASB 87. And the change that you'll see is under the capital and intangible assets being depreciated category, the right to use intangible leased assets equipment. So we did have to restate these. The intangible assets equipment that we're talking about are our multifunction devices, and then a postage meter that we've leased. So we were fortunate that we didn't have more of these these agreements to have to go work through. But that's what these are for. And so you'll see that there's not only the asset being depreciated, but then there's also the depreciation in the next category down. Okay, so those are both lines that we've added. The construction in progress this year, you'll see the additions and transfers is $3,361,609. The majority of that is the Grantsville open space renovation, but we also have the Southern Middle School feasibility and education specification project, as well as the Northern High vestibule, the roof at Grantsville, and a couple PA systems that were sitting there. The buildings and additions that were added, so if you go down to the capital and tangible assets being depreciated, the first one is buildings and improvements. The additions there were $1,457,629. So that was all the work that Mr. Wazowski had been bringing, the projects that he had done, all the flooring he's changed out, the phase 2 of the air quality initiative, the Northern Middle School vestibule. There were storefronts at Friendsville, Broadford, Southern Middle School, so and a couple playgrounds. So there was an awful lot of work done, and I think the defeating part of this for me is that when you go down and you look at the less accumulated depreciation and amortization, buildings and improvements depreciation is over $2.7 million. So that means the useful lives of our buildings are aging out quicker than we're able to replace them. And that's been the case for a couple years, and this is sort of a barometer that even when Mr. Porter was here with us with the Rodeheaver Group, he and I would discuss it as well. So I did want to highlight that with the board. So then the next page continues note 4, and you'll see there's an added schedule there, the amortization expense for intangible leased assets, and that's breaking that amortization down by the department, the MSD category. Okay. If you want to go on to page 44, that's where you'll find this elusive note 9 that we've been talking about. It talks about the adoption of this accounting principle. And then we just roll right into OPEB, which is something that we talk about every year. So this was a year where we did not revalue the work that the actuary did. We didn't provide new information because it was the second year. If you go on to page 45, you'll see that the board did not make any contributions to the OPEB fund. All of the contributions that did go through were what we call PAYGO. So they were part of the operating, the current expense for the board. The big change here, when you drop down under the net OPEB liability heading, you'll see that the actuarial assumptions, the biggest change here is the discount rate. So the discount rate that our liability was using was 3.54%, and last year it was 2.16%. That's important because as a discount rate increases, the liability decreases. So there's that inverse relationship. So if you go to page 46, you'll see the table that presents the changes in net OPEB liability. The balance of our net OPEB liability, net OPEB liability at July 1st of 2021 was over $40 million. But because of this discount rate increasing, the liability did decrease by over 5 million. Okay, so we're looking at 34.9 million as the net OPEB liability. The PAYGO that's hitting the bearing on the general operating funds has been relatively consistent. It was down year over year slightly because of the age of our retirees and where they're falling in their benefits. So, okay, and then the last portion I'd like to go over is on page 50, note 11, the state retirement plans. So if you'll recall, there are two state retirement plans that the Board of Education participates in, the teacher retirement system and the employees retirement system. The teacher's retirement system is a liability that sits on the state's financials. However, the employees retirement system is part of your financials. So that you will see those in those district-wide at the very beginning. You'll see the impacts of this. So the state's contribution on behalf of the board for fiscal 22 was $3,010,194 for the sorry. So that was the state's contribution for both. Then the board's contribution was for the teachers was $1,523,108 and $370,264 for the employees, or the ERS versus the TRS. Just like our OPEB liability, the liability for the state retirement plan shifted a lot as well, and it decreased by over $10 million that they booked for us. As well as the employee retirement system net pension liability decreased over $1 million. So a lot of those actuarial estimates are really driven by the discount rate at that time. So again, just like what Brant had said, they're estimates, they're actuarial pieces of information that we do feed into the financials. So that's all I had to go over, and now we'll turn it over to Brianna to go over the single audit.
Questions right now, or does anybody have any questions?
Okay, we'll do questions.
No questions. Okay, Monica.
Page 39, at the bottom, it says transfer between the current expense fund and instruction fund consistent amount of capital funding overages or shortages within the school construction fund.
I'm sorry, what page did you say?
Page 39.
Okay. Right.
Yeah, the transfer amount. Is that been budget transfers that we did? Is that what it's referring to? No.
No. So at year end last year, we had booked, we being your finance department, had booked a receivable from the state capital grant program for the turf and the resurfacing of the tracks at both high schools. The state was delayed in reimbursing us because of their COVID processes, and so we did not receive the reimbursement within the 60 days after the fiscal year ended. So as such, you can't book it as a receivable, you book it as a deferred inflow.
Okay, so that's what it was for then, for the turf and track fields, you're saying? That amount of money.
Yeah, is that, I thought she was talking about that. Okay, yeah.
Okay. I had one more, two more questions here.
Page.
I'm looking. When you look at page 23, under school activity, you refer to school activity a couple times. What is a school activity? Like, I'm trying to remember what
They're the-
falls under that.
The bank accounts that the schools operate, so Crellin has a bank account at Clear Mountain Bank, and they write their own checks. And so all of those funds roll up to the current expense fund.
So would that be like money that PTO would bring in for different things?
It's not PTO money. It's the PTOs have their own bank accounts.
Okay,
This is what the school has as their own bank account.
okay.
Picture money, I mean, there can be a number of things that are going to the school.
Okay, so it's not money that the Board of Education gives them as an allotment to spend money. That's what I was trying to understand.
No.
It's money that's brought in through, like you said, school pictures, different things.
Right. Or it's just passed through. If there's a field trip and everybody has to pay $10, it goes through this account.
Okay. All right, and then okay, on page 19, under excess deficiency of revenues, other expenditures, the money under school construction fund. So you're saying that's money that we've would you say money received, not able to spend, like?
No, that excess was the $1.7 million
Yes.
that we did not receive within 60 days of June 30th, 2021.
Okay, does that go back to the turf fields again?
Yes.
That amount? Okay.
Yes.
Okay.
Yes.
Just want to make sure.
Exactly.
Some of the questions I had you answered along the way, so I was trying to mark down the ones that I didn't. I thought there was one more. Okay. On page 7, when you look at the percentage change, like one that was high, changes at the bottom of the page, changes in net position from operating results. It says program revenues, charges for services, and it says the percentage change, higher amount was 125.19%. So what is that charges for services?
The charges for services were the student activity account dollars that they had, that fundraising money that had gone through student activity accounts.
Okay, so
because
that's
during COVID, they weren't having fundraisers, they weren't having sports or any of those normal activities where the money flows through. And so that was the large increase in charges for services.
okay. So that's all under the student activity. Then is what you're saying. It falls back
Yes,
to.
that's the driver of the change there.
Okay. What about the last one there? On that same under changes in net position from operating results, it says other, and then the change on that is 719.50%. So what is the drivers under the other?
Those are just other awards that we received from, we received an additional award from MABE because we are now part of the liability pool. So we received an award for that. There were just other different pieces of awards. The E-rate dollars go through that for the reimbursement. So
Okay. Thank you. You can go. Yeah.
Okay.
did you have questions, Ron?
No, I don't.
Okay.
Anybody else?
Okay, so we'll have Brianna go next.
Okay, thanks.
So I'll be going over the single audit report. It's the smaller of the packets. the first page, it's our independent auditor's report on compliance for each major program and on internal control over compliance. The biggest thing that we need to mention with these is that it is a little restructured from last year just because of new accounting standards that have been factored in this year. But the main thing is on this first page, the second paragraph. In our opinion, the Board of Education has complied in all material respects with the compliance requirements for the fiscal year. And if you turn to the schedule of expenditures of federal awards, which is the CFA, on the second page, the total federal awards for the fiscal year, or expenditures for the awards, was a little over $11 million. Last year, CFA was a little above 9, so that's an increase of 1.7 million for the fiscal year. The major programs for this fiscal year were special education, which was 1.2, and the education stabilization programs, which is COVID money, which was 4.1 for this fiscal year. And if you turn to page 8, that kind of is a reconciliation to the financial statements that Allison just went over. And the only two reconciling items we have are the JROTC payments and the Medicaid that Allison had mentioned earlier. On page 9, there were no audit findings for the 2021 fiscal year. And on page 10, this tells you that there was an unmodified opinion for the financial statements, an unmodified opinion for the federal awards, and the Board of Education still qualifies as a low-risk auditee for the fiscal year. And there were no audit findings or significant deficiencies or material weaknesses. Is there any questions?
Are there any other questions for any of us?
He was talking about the difference, like for federal awards, that we got more money this year than the prior year, and you explained more because of special education and COVID. So some of our COVID money we've kept to spend in subsequent years. Is that correct? They didn't all have to be spent, you said, till a couple years down the road. So that's, where does that reflect here then?
This is just a report of what we actually spent.
Oh, this is not.
This is not a
okay.
budget to actual
Okay.
schedule. This is just what we spent and what the U.S. federal program of that spending was.
Okay.
And there is some of the funding, it does say that it runs through 2024, so you can see the period of availability on that schedule as well.
Yeah, like the ARP, ESSER, Maryland Leads, total education stabilization fund. And it says 9/30/2024. So the amount with that, the $964,715, that is the money that we have spent, correct?
In FY22.
Yes, I told you. Okay. So then on something else one had given us before, we actually probably still have a dollar amount from that ESSER money that we have until 9/30/2024 to spend, correct?
On a lot of them.
Yeah, okay.
As you can see, they all have a little bit different grant periods. And that's why you saw that variance on that budgetary basis restricted schedule.
Okay. So I do have one more question. When you look at the one that Brianna just did on page 7, the last one, under, well, it's a summary of significant accounting policies, talks about the food. The last sentence, the board has food commodities inventories on hand at June 30th, 2022 of $156,973. That's just like food that we have, supplies that we're using now. Is that what that means?
So food service gets inventory from USDA.
Mm-hmm.
So that'll be what's left in inventory as of June 30th.
Okay.
That's USDA inventory.
So just extra stuff sitting on the shelf that we're using now then, basically, is what you're saying from the inventory. Is that what you mean?
Right. A lot of it's like frozen meat,
Mm-hmm.
that kind of thing. Yeah.
Okay.
But remember, we had summer food
Feeding
service,
programs.
so that inventory isn't the same
Right.
today as it was then at 6:30. Right. And summer feeding has different menus than regular school service, so it's a different thing altogether.
So you're saying that some of that amount, that dollar amount, was food that would have been used in the month of July, basically, for a summer feeding program
Yeah.
in August before school started.
Mhm.
Okay. I think that was what I have right now. Anybody else?
Thank you. Thank you.
I'll make a motion to accept the audit as presented.
Second.
Okay, we have a motion and a second. Mike, any discussion? Oh, I'm sorry. Any discussion?
Yeah, thanks to Allison and her team as well for
Oh,
a good
yeah,
job.
I'm sorry.
Mhm.
Yeah.
So appreciate that.
Right. And I spoke
Sorry,
with
Annie.
Mr. Woods as well earlier today, and he specifically asked me to thank not only you, but your team here at Central Office, and certainly the team at Rodeheaver. So on behalf of Mr. Woods and myself, of course, thank you so much for a tremendous amount of work. I know it was a lot of extra dollars in the federal funds, and really appreciate the detail and finding that certainly the low-risk oddity is very good news. So
Yes,
thank you.
We're always pleased to have that, but it's a system-wide effort to get our financials done every year, and it's all the way down to the school secretaries who have to meet their first deadline, and then all the way through. So it's really, it goes the gamut.
Absolutely, yes.
Well, great job.
Okay, I think we
Any
can vote.
other discussion?
Well, I have just one more. I just seen. Then I'm ready to ask right now.
Yeah, sure.
Okay. On page 55 of your financial report, it says note 14, related parties. And the second sentence from the end, it says the annual fair market value of the space occupies $148,800. The fair market value of the appropriated space is recorded in the accompanying government-wide and fund financial statements as both revenue and expenditures. So is that referring to this office here, correct?
Yes, that's for 40 South 2nd Street.
Is that like the value of using it for a year's time?
Yes, that would be if we had to rent
Mhm.
the space and pay someone. So there's a two-sided entry that occurs every single year that is revenue, local revenue from the county, as well as an expense for through operations.
Okay, that's what I thought. So that's for 12 months. Okay, thank you.
Any other discussion? Okay, we ready to vote? All in favor of the motion, say aye.
Aye.
Okay, that's 3-0. So the majority rules.
Thank you, Mr. Glatfelty. I really appreciate the board's attendance this evening, and again, thanks to all three of you and all of the teams.
Okay, we need a motion to adjourn.
Second.
Any discussion? Okay, all in favor? Say aye.
Aye.
Okay, we're adjourned. Thank you very much.